Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is Monday, January 21st, quickly wrapping up the first month of the year here in 2025. We're going to take a look at one out of the consumer discretionary sector, Lennar. This is a home builder. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell down below so you're notified whenever I put out any new videos. I do this Stock Pick of the Day video series Monday through Thursday when the market's open. We take a look at a company's stock that's pulled back on the day to see if it is presenting any value by looking at a screener that I have set up. And just because it meets the criteria of the screener does not necessarily mean that I'm investing. It just means I'm interested in doing more of a deep dive into the financials of the company. There is the thanks button down below for those of you who are able. Any money made from the channel will go back into 3 buckets, my daughter's 2 custodial accounts, as well as my overall portfolio. I will cover any funds that I get from the overall channel probably on my Sunday morning updates. I do a portfolio update every Sunday morning. So one more reason to hit that thumbs up button, hit the subscribe button, the notification bell, and drop a comment down below. What are you buying right now? What do you think of Lennar? Is it in your portfolio? Is it one you are watching? Or is it maybe one you're selling? Maybe you're part of the downturn today. Special thank you to the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is the criteria we will be covering on this video. We'll run through this. It's got to meet 5 of 8 to make it onto my watch list. If it was a financial company like a bank or an insurance company, then I would add in price to book, and it would need to meet 6 of 9. But we won't touch on price to book here today. So like I said, it is out of the consumer discretionary sector. Now, if you were looking at companies and wanted to use price to book, let's say for Lennar, for example, you could compare their price to book to someone like D.R. Horton, Pulte Homes, one of the other home builders out there, and then you can kind of see where they're at in comparison to each other. You could also look at the price to book for that company like Lennar and see where it is over the last year or two, and then see if there's undervaluation based on where it currently is compared to its historical averages. Let's jump back over to Lennar. You can check them out on their homepage at www.lennar.com. That's www.lennar.com. That is their homepage where I pull this information from. Lennar's history since 1954. Lennar has built over 1 million new homes for families across America. We build in some of the nation's most popular cities, and our communities cater to all lifestyles and family dynamics, whether you are a first-time or move-up buyer, multi-generational family, or active adult. So again, they are a home builder. Now I will say, as part of their options, or I guess products that they offer whenever you're buying a home, they do have a mortgage arm, so they're writing their own mortgages. They do have a title arm, and they do have an insurance arm as well. So they're kind of a one-stop shop, right? You can go there and get your title, your insurance, and your mortgage all from Lennar whenever you buy one of their homes. I believe you can also go outside of their mortgage, title, and insurance company, but they probably would rather keep you locked into all of their one-stop shop type of products. But a home builder, that's their bread and butter. Now, the reason we're taking a look at them, down 6.97% on the day. We are talking about Lennar Corporation, ticker LEN-B. Now, I will say there is another Lennar out there. It is the same company, but similar to Google. They have 2 different, and maybe even 3. I think it's just LEN and LEN-B, but there may be an LEN-A. I need to look at that. Let me know in the comment section below if there is. There's at least 2. I know there's a LEN, and I know there's a LEN-B, but I don't know if there's a LEN-A. I did not look at that. We are looking at the LEN-B, so just keep that in mind. There's several tickers for this same company, similar to the way that Google has multiple tickers for Alphabet. So just a funky thing that they do. I don't know exactly why they do it, and I don't know exactly what the differences are. You would want to do a deep dive into that and understand what the differences of the companies are, what the differences of the tickers are for the company. Sometimes it's around voting rights and that sort of thing. But I did not do that type of deep dive here. That's not what this video is about. But they were down 6.97% on the day. Close out the day at $126.07. Looks like they're, it says they're down 0.15%, but same 126.07. So I'm not sure what that's about. Must be some of the zeros beyond the 7 cents there. But 52-week range as low as $123.19, as high as $177. So they are within 15% of a 52-week low, pretty close to their 52-week low, actually. market cap of 35.533 billion, a beta of 1.62. So they are more volatile than the overall market. You can definitely use that volatility to your advantage. Try to pick them up whenever they're down like they are currently. Price to earnings PE ratio is $8.81 per share. EPS, earnings per share, sitting at $14.31. One of the rare times we see our earnings per share is higher than our price to earnings. Earnings date is coming up March 11th through the March 17th. That's going to be sometime in that window. I don't know why they don't just give a date. Just tell me when you're going to release it, but they always, oftentimes, give a window here. So somewhere in that week window, they will release their earnings. You can check out that call on their webpage, homepage there. Forward dividend is $2. They are quarterly payer. We'll see that here in a little bit. Starting yield to 1.44%. So low starting dividend yield, but that's not necessarily bad if they are growing it fast. Now we're going to look at dividend yield theory to see if this one is potentially presenting any undervaluation. Ex-dividend. Let's check on the ex-dividend date first. October 9th was their ex-dividend date. They pay out February 12th. So if you were to buy them now, you're not going to get this payment on the 12th of February. You'll have to wait several months to get the next one. So you're past the ex-dividend date. You need to buy a company stock the day before the ex-dividend date. So if the ex-dividend date is on 10/9, you need to be buying on 10/8, October 8th, the day before or earlier. They did not have a one-year target estimate on Yahoo Finance where I pulled this from. Now let's jump over to dividend yield theory. To do that, we look at their 5-year dividend yield average, 1.29%, compare it to their current 1.44%, or over here where it says forward annual dividend, same number, 1.44%. Since their current dividend yield is higher than their 5-year average, that speaks to undervaluation. These numbers are inversely correlated. That means they're the opposite. Since it is higher, means potential undervaluation. If it was lower, it'd mean potential overvaluation. So right now, at least according to dividend yield theory, this one is slightly undervalued. Payout ratio is 13.98%. Very low payout ratio, gives them a lot of room to increase the dividend over time. Doesn't look like they're in danger of having a dividend cut. Dropping down, I want growing free cash flow over time. Typically, if a company has growing free cash flow, they have growing dividends. They can also buy back debt. They can buy back or repay debt. They can buy back shares. They can make acquisitions, reinvest back into the company, and raise those dividends over time, which is what I like to see. Going back here to November 2021, here you can see $2.4 billion in free cash flow. November 2022, that was up to $3.2 billion. November 2023, that was really up to $5 billion, but it looks like in the trailing 12 months, which would be all of 24 at this point, since we're into 2025, looks like a decrease down to $3.2 billion, at least so far. I don't know that they've reported out all of their numbers from 2024, but maybe that's what this March readout will be. They're repurchasing shares as well, so they're taking shares out of the market, which I like to see. November 2021, here you can see $1.4 billion. They dropped that down a little bit, so even though the free cash flow was up quite a bit, it looks like they decreased their repurchase here to $1 billion. 2023 was back up a little bit to $1.1 billion. Free cash flow was significantly up, and trailing 12 months dropped down a little bit down to $1 billion again. So, but I like that they're repurchasing shares, taking shares out of the market. Makes you more of a shareholder, even if you don't add to the position. Now, jumping over to stockanalysis.com, another site I go to, I do recommend more than one site. Don't just blindly trust that one site is giving you all the information correctly. Sometimes they're wrong, sometimes they're not updated timely, and sometimes they're just incorrect. It happens. Now, they have 13 analysts that have taken a look at this. They call it a consensus buy, though it is right there on that sliver of an edge on the buy. But this would be a hold. This would be a sell, buy, strong buy. So if you were to go to stockanalysis.com's webpage, you could see out of the 13 analysts might call it a hold, or how many might call it a sell. But it is leaning just slightly to the buy range, according to the 13 analysts that have taken a look at this. Low estimate of $130. It currently sits below that. So if it came back up to the low estimate of $130, that would represent a 2.96% increase from where it currently sits. Average estimate of $172. That's pretty close to its 52-week high that we saw on the previous page, but that would represent a 36.29% increase from where it currently sits. And a high estimate of $236 would represent an 86.92% increase. All the while, you could collect that 1+% dividend yield if you were to buy them now. Now, I like to jump into statistics and look at I like to jump into statistics and look at return on equity and return on invested capital. And I like 10% or better for both of these metrics. Return on equity is sitting at 14.5%, so it's above the 10% I like there. Now, return on invested capital is just ever so slightly under at 9.82%. Now, typically for me, if I was looking at a company like this, and this was the only thing that was keeping me from maybe doing more of a deep dive, I would just say close enough to 10% for me. But to be fair, this is technically under the 10% I'm looking for, so I'm not going to give it a check, and we'll see where it shakes out overall. EPS growth, earnings per share, is sitting at 12%. I like 5% or better forecasted over the next 5 years, so it beats the metric there. And revenue growth is forecasted at 6.82%. I like to throw that in. It's not part of my initial screener, but it is part of what I look at whenever I do more of a deep dive into the financials of the company. Now, again, quarterly payout ratio, very low, under 14%, 13.98. Dividend growth, very fast. Now, I mentioned it earlier. I'm not necessarily enamored with a lot of low yielding companies, but if they are growing this fast, 33.33%, I don't mind them if I can get them at the right price. So very fast, double digit growth here, 33.33%. Now they do only have 1 year of dividend growth. They did have a pause here from 2021 all the way to 2024. They were at 37 cents, some fraction of a penny, and then most recently here, January 2024, they raised it up to 50 cents, which paid out February 7th. And that's going to be that same 50 cents payout that they're going to get here in February, I believe. I have not seen anything showing that they are raising their dividend. Now, this says the payout date was October 24th, so maybe Yahoo Finance was wrong. I'll have to look that up and see what the deal is there. 1 year of growth, though. Buyback yield is positive. You want to see buyback yield positive, or I like to see it positive at 3.99%. That tells me they're buying back shares at an opportune time whenever they're cheap. And shareholder yield at 5.56%. I like positive shareholder yield as well. They do pay out on the February, May, July, October timeframe, which is off cycle for most companies, so I do like that as well. All right, let's jump to the screener. I'm seeing a lot of green checks, so that's a good thing. Understand the business. Yep, that's where we started. They're a home builder check. But like I said, they do offer their own mortgage, title, and insurance whenever you're buying their homes. I don't know that they offer that for other homes. I didn't do that big of a deep dive into it. But I know that they offer those services whenever you're buying one of their homes. If you're not, pre-approved by a lender that you want to use, they can get your mortgage through them. Growing free cash flow. Nope, we had the one down here. Growing dividend. Yes, we are seeing a high double-digit dividend growth. Dividend, even though it is only the last year, so keep that in mind also. Now, I will say when I did go back to 2015 and before, they were growing the dividend. They do have a history of kind of pausing that dividend for a couple years and then starting growth back up. Maybe grow it for a couple years, pausing it. So they are a cyclical company. Looks like they're pausing and starting that dividend around that cyclicality. I'd like to see a little bit more steady growth, but whenever they are growing it significantly. So it kind of makes up for those years that you might not see, maybe 1 or 2 years you don't see growth, but then you get a 33% growth where you average that out. It's pretty good average growth. Dividend payout ratio is under 75%, so it's actually around 33%, very low. Dividend yield theory says it's potentially undervalued. It is within 15% of a 52-week low, very close to its 52-week low, actually. Return on invested capital was just below 10%. Return on equity was over 12%, so I'm not going to give it a check there, but like I said, it's so close at 9.8%. Typically, if I was interested in a company and it's like this, where you've got a bunch of other checks, I would not worry about that at all. Earnings per share growth was over 5% as well. So you're looking at 1, 2, 3, 4, 5, 6 of 8. So, I mean, really the only one it didn't get was the growing free cash flow because of the 1 year it was down. And the return on invested capital was just under 10%. So, I mean, this one looks like one that you might want to do a deep dive into the financials, see how well this is growing over the next several years. Might be a good time to do some investigation on this one just based on the screener here. Well, that is it for this one. Let me know what you think of Lennar in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of Lennar. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below, and I'll try to work it in on a day it's pulled back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.